On the show today, we are going to have Forum Chera's technical view on her market strategy, F&O action, and how that segment is shaping up. Sajit is going to be taking us through that. In terms of the big market voices, here out from Venugopal Gare and his strategy on how to navigate the markets like this. Also, we're going to be decoding some Nifty earnings to watch out for on Friday. Sun Pharma, Hindalco and Eicher Motors. What to expect from all of these Nifty heavyweights. So much to talk about. Let's get started with the show and take you through Thursday's trading session, and that expiry pressure for the Sensex expiry played out for the market in the last hour or so. We've ended absolutely flat on the Nifty. 23,654 is where the Nifty has shut shop, and absolutely flat as I mentioned. Sensex was under pressure by about 0.2%. The India VIX cooled off a further 3.25%, now at 17.8. But the resilience was shining bright on the broader end, because you did have the Nifty small cap index that was up by about 0.7%, and the mid cap index also managed to close in the green, although very nominal gains of just about 0.1% on this mid cap index. In terms of the sectoral movers, you had some pressure on your traditional defensive names like Nifty IT and FMCG. They were under pressure by about 0.5%, followed by cuts in media, banks and finance. And on the flip side, Nifty Defense was one of the top gainers. You had stocks like Paras Defense, MTAR Tech, Cochin Shipyard that did really well, followed by Nifty Realty, Phoenix Mills, Prestige Estates have done well. Energy, auto, PSU banks, metals, pharma and oil and gas. These were the top gaining sectors in Thursday's trade. From the broader end of the market, a lot of movers coming in on the back of earnings reactions, either very big losses, like the case has been for Jubilant Foodworks. That stock was under pressure ever since the opening bell on Thursday. And then you've got some names like PI Industries, Eris Life, Bosch, Ola, Zydus Wellness that were under pressure. But on the flip side, on the back of some very strong earnings, Honeywell Automation was up about 16%, Sammaan Capital was up 9%, Techno Electric, Triveni Turbines continued to gain for a second straight day, Amber Enterprises, so some EMS themes were in focus, along with the Tatacom, IRB and ABFRL, and Indian Gemological Institute, IGI, that one also saw gains of about 6.5%. So all round, it was a good day of trade for the broader end of the market, but absolutely flat on the Nifty. And Sajit, while this is on the equity front, take us through what the F&O roundup has looked like.
That's right. We started on a little positive note, trying to inch about the 23,800 mark, but then thereafter we've seen some of the unwinds coming into play with aggressive call writing coming in as investors were trying to roll over the positions from the May to the next month series for the futures, and for the option side from May 26 to the June 2nd series, which was there. But what we are seeing here is that a lot of call writing happening at 23,600, 23,700 and 23,800 strikes. The Nifty, finally Nifty futures, Nifty ending nearly 0.23% lower, especially in the last 45 minutes, where we've seen some Sensex expiry impact also coming in. The Nifty Bank also ended lower, nearly 122 points. With if you look at the constituents, you had a long unwinding coming in for HDFC Bank. There was PNB, BNB and SBI, which also saw some longs getting unwound. But in the other private sector like Axis or for that matter Kotak, we've seen some kind of short build-up coming in. Look at what's happening in the option market and especially from a call and put writing point of view. It clearly gives you an indication as how the build-up of calls happened in various strikes, whether it's 23,600, 700 or 800, and that's reflecting in the distribution chart as well, where we're seeing the call writers having a better position, holding on to that level and preventing the index to close about that level there. For the most of the part of the day, we were above the 23,700, but towards the last 45 minutes out, we came down with aggressive call writing that pushed the index below marginally today. Look at what's happening in the futures market, especially stock futures. You have Sammaan Capital, we saw Grasim and Amber Enterprises, where we have seen some short covering coming in, with Sammaan jumping nearly 9% and Grasim and Amber jumping nearly 6% in today's trade in the futures market there. If you look at some of the losers, you had the Jubilant Food, where we saw the stock down nearly 8%, PI was down 5% and Bosch was down 4.75%. All unwinding some of the long positions in May series. Open interest gainers included Manappuram Finance, where we're seeing some long build-up happening. Bajaj Finserv was, under pressure. A short build-up happening with nearly 14 or 15% of gains in open interest. HDFC AMC was seeing some long build-up with nearly 13% gain in open interest there. Among the losers, you have stocks like Force Motor, where we saw a short covering and 35% fall in open interest there. RVNL saw some 24.5% fall with long unwinds coming in, and TCS in the IT pack saw some long unwind with 24% of interest coming down. Most of this is primarily because of the kind of rollover which is happening from the May to the June series, and that's what is what's seen in the market. The Nifty ending almost flat, 0.02% lower, just 4 or 5 points lower than yesterday, and ending under discount of nearly 19.7 to the spot. And the kind of open interest build-up that we saw, 9.85%, it was basically largely some of the unwinds which we were seeing in today's market there. But nearly 20% odd of rollover has happened to the June series for the Nifty, and in many cases, like banks, HDFC and ICICI, a large chunk of rollover has already happened to the June series there. So we are heading into tomorrow Friday's trade with some baggage of rollovers that will come in. Not much of short positions have come off today as of now, but we expect that to happen as the rollovers get aggressive on Friday and Monday.
Okay, so that's the F&O snapshot and what to expect on this front on Friday as well as the week to come. But let's take it across to Meryl, who's also joined us on the show with a list of all the important factors and events to watch out for, be it domestic, global, in terms of some earnings and corporate action back home to keep on your radar for Friday. Meryl.
Yes, these are some of the important cues to watch on the 22nd of May. In India, we'll be watching out for the weekly forex reserves data, while globally investors will watch UK retail sales and consumer confidence data, and Japan's CPI's inflation print will also remain on the radar. In terms of earnings, it's a packed day for pharma and auto as well as metal names. Nifty names in focus include Sun Pharma, Hindalco Industries and Eicher Motors. Apart from that, several important companies will also be reporting their fourth quarter results. These include Torrent Pharma, InfoEdge, Colgate-Palmolive, Fortis Healthcare and Narayan Hridayalaya. Corporate actions wise, we're going to be watching out for the boards of Torrent Pharma, Narayan Hridayalaya and NTPC Green Energy, all considering a fundraising proposal, while Sindhu Trade Links board will also be meeting to discuss the acquisition of Advent Coal Resources and Scenic Mining. One important market trigger to watch remains the expected Sensex reshuffle announced by the Bombay Stock Exchange. Street expectations suggest either Hindalco Industries or Shriram Finance will be replacing Trent in the index, so do watch out for that one as well. Finally, the RBI meeting will also be closely tracked with expectations of a dividend payout announced nearly to the tune of 3 trillion rupees to the government of India. So yes, these are all the important market cues to watch out for on the 22nd of May.
Thank you, Meryl, for that update. We have now joining us Forum Cheda, founder Chart Analytics. Forum, hi. How do you look at the Nifty at this point in time? I mean, it's ended on almost a flat note. Going into the expiry, where do you see Nifty headed?
Well, hi, good evening, and thank you for having me on the show. Well, to begin with, as Nifty, we see it's losing its momentum, and overall, in fact, today it opened also with a good gap up. So that was actually like taking off the resistance, very short-term resistance of around 23,700. So it was a very good thing. However, it again faced a lot of resistance, losing the momentum. Probably there is a lot of more uncertainty, and with it, expiry also on the BSE front would have triggered a little bit of overall losing its momentum. So I think overall the Nifty does remain into a consolidation where on the lower side we have support levels placed closer to 23,300. And on the upside, the immediate resistance of today's high, as we can say, that's around 23,750 to 23,800 acts like a short-term resistance. If we have to see a good weekly closing tomorrow on Friday, being Friday, a weekly closing is very much essential for the Nifty to show some further momentum in the coming weeks. So I think it remains into this consolidation. Only a good closing about 23,750 or 23,800 would trigger some bullish momentum. Otherwise, we may see more of a sideward movement coming in.
Forum, hi, good to be speaking with you. Give us a sense of which stocks you are liking amid a market like this. It's increasingly becoming a stock because market. What would you recommend at this point?
Well, hi Snehi. So if we talk about first stock is on my list is Thermax. Now Thermax overall the stock price has been seen a relative outperformance compared to the Nifty as a benchmark. We have seen overall also since April the stock price has seen a good up move of closer to almost on an average of 40 odd percent. Most of the mid caps I would say stock specific action has seen that. But the stock price did see good increased volumes even today when the markets was losing its momentum. So that was a very good sign. The stock price also closed nearly 3.5% up today. It retested the breakout level and showing again a good up move. So according to me, it's a good buy at current levels with a stop loss below the levels of around 4390 for a target price of around 4845 to around 4845 50. And the next one that I have on my list is again another interesting stock is Timken. Now, Timken has given a very big, good breakout after a long time. It's taken off a very long consolidation. Since July, the stock price was into a consolidation, and finally, it's taken off today. So, and on such a quiet move, I would say, as the index is, the stock price has seen a relatively a good performance. And today, also, the stock price has closed positively by around closer to around 1.5%. So, according to me, again, it's a good stock with good increased volumes. So one can consider buying near the levels of around 3632 with a stop loss below the levels of 3570 and for a target price of close to 3770.
Can you also give us a sense of how ICICI Bank and maybe Reliance is looking?
Sure. So first we'll pick up is ICICI Bank. Well, after I would say in beginning of April, the stock price had seen an excellent move, like from almost 1200 levels. I'm rounding it off to closer to almost 1390. So that's closer to 16%. It's lost nearly, I would say, 80% of this move and seems to be consolidating and taking a breather. In fact, when we talk about or correlated to the Bank Nifty index, as the Bank Nifty index is consolidating right now, similarly, so is ICICI Bank. Good support levels are placed closer to a level of 1,220. And we just want some more kind of a positive closing for a bullish divergence on RSI, which would actually trigger it to become more like a buy overall. And in Reliance, actually, again, a very similar move that it lost out its entire move, what we saw in the past few weeks. And even right now, we see that or rather it opens up, but it loses out a lot of momentum and gives a week closing overall end of the day. So the support levels for Reliance Industries are placed directly at around 1,320, while it's facing resistance near the 50-day moving average that is close to 1,375. Even if it has to take off those levels, we can expect it's going to face a little bit of more difficulty near 1400 to 1410. So more than I think if you compare the two also just from a large cap space, I think ICICI is better yet compared to Reliance.
Forum, thank you very much for joining us and giving us those insights on the Nifty and some of the stocks. Moving on to ITC, numbers came towards the end of the market. Sneha, how are the numbers looking?
Surprisingly, Sari, they look like a very good set of numbers this time for ITC because we were expecting to see some pressure on the numbers on the back of that tax hike that the government put into implementation from 1st of February, and that could have affected Q4 earnings. But this could also mean that there has been a lot of advanced stocking in the month of Jan, and on the back of that, the cigarette sales numbers look really good. So if I have to take a look at what the numbers are looking like on a standalone year-on-year basis, the net revenue, if you remove the excise portion from it, is down 7% and is a miss versus our estimates. But this is the only pain point in the numbers along with the agri numbers. Other than that, everything is looking good because you have EBITDA, PAT and margins that have beat our estimates. The margin number has come in at 40% when we were expecting just 33.2. So looking very good on the margin front as well. Talking about cigarettes, the cigarette revenue growth is up 31.7%. Now, traditionally, this is a segment that grows at the rate of 6 or 8% in terms of revenue growth on a year-on-year basis every quarter. So this 32% 2-number mark jump on a year-on-year basis, looking very solid. The volumes, of course, are not specified, but the management has cautioned, saying that domestic demand for leaf tobacco in the near term is expected to be subdued. They've also commented on the tax hike, saying that FY27 outlook remains very highly challenging amid the sharp tax hikes. Higher cigarette taxes may weaken near-term tobacco demand, and this could also lead to more illicit production of cigarettes, and export focus is being intensified to offset the domestic weakness. That's the company's strategy. They are also going to be taking calibrated price hikes, is what they have said. Shifting focus, FMCG has done well. Staples, biscuits, snacks, frozen foods, Yippee noodles, dairy, premium personal wash, home care, agarbittis, Ashirwad has all driven growth over here. Recent acquisition, then Mother Sparsh, Prasuma, Meetigo, 24 Mantra Organic, they've all done well. They're growing at an ARR of 1350 crores plus on an annual basis. Next up, you have the agri business, the 16% cut in revenue on a year-on-year basis looking weak. This has been blamed on the deferral of sales amid West Asia conflict. So that looks weak. Paperboards looking slightly weak as well. Freshwood business has done well. So overall, I would say segmentally, it's a mixed set. But if you take a look at the operational performance, the top line is a miss. But other than that, Sajid, your EBITDA margin as well as PAT are a very strong beat versus our estimates.
Thanks, Sneh, for that. I think ITC did react towards the end of the day, but we'll see a more better reaction tomorrow based on what the company says and how analysts are looking at the stock. Moving on to stocks and news, we have Avi joining us, giving us a take on what to expect.
Let's discuss some stocks that were trending in news today, starting from Adani Power. Adani Power is all set to acquire a 24% stake in Jaiprakash Power Ventures, which is held by Jaiprakash Associates for consideration of 3,000 crore rupees. It will also acquire a 180 megawatt thermal power plant in UP for a cash consideration of 1,200 crore rupees. This takes the total consideration to be paid to 4,200 crore rupees. Talking about Honeywell, has also come out with a very strong numbers, with revenue up 6%, EBITDA up 16% and PAT up 15%. The recovery in gross margins is mainly due to the execution of loss orders and the cycle of provisioning behind them. They expect the gross margins currently to continue in the coming quarters, the EBITDA to be in the range of 15 to 16% in the coming quarters, which could inch up to 19 to 20% depending upon the execution capability of the management. Talking about Sammaan Capital, has also come out with a very good set of numbers, and the management guides that the disbursements in Q1 is going to be up 50 to 60%, and the productivity compared to March in April has already been doubled. They guide for a NIM of 3.5% in FY27. Talking about Ola Electric, came out with a poor set of results, and it was a miss on all fronts. In fact, the loss for Q4 FY26 has surpassed its revenue. The management guides that there will be a pressure on the margins because of the commodity inflation. Ola Electric has also undertaken vertical integration, which has helped its margin and helped it cut cost by 10 to 15%. Talking about WeWork, has also come out with a very good set of results, and that's the reason the stock is buzzing in the positive. The growth in revenue is mainly due to the traction seen in the GCC segment. In fact, the demand has surged across customer segments, and the portfolio occupancy is at an all-time high of around 87%. The balance sheet has turned net debt negative for the first time in its history. Over to you.
Okay, Avi, thanks so much for taking us through that. So those were a list of all the stocks that were buzzing either on the back of news and updates or earnings in Thursday's trade. But also hear out the word coming in from Mr. Venugopal Gare, the managing director of Bernstein, because he says that he expects the rupee to depreciate further. What are his views on currency and FII flows? Listen in.
Rupee will structurally depreciate. It has always been the case. It's not a 5-year, 10-year thing. It's always been the case. As long as we remain in this situation from a flows perspective, we will see structural depreciation. It could be 3% in a year on an average at times, or maybe 5-7% in certain years, and maybe 1 year it doesn't move at all. So that's the way it is. So for us to basically think about a more stable rupee, we basically need to enhance a lot of things that we do in the economy, which are external facing as well. You need to earn dollars in some way. How do you do that? You need to strengthen your manufacturing materially. And for that to happen, you need to be doing certain things which are not being done across the world, or you have certain IPs that you're creating locally, or invite companies to build joint ventures here which create IPs out here. So it's a very different approach they need to do. What is the biggest problem foreign investors and others have at this juncture? They worry that India is an AI impacted economy. It's a different story altogether. how will you create jobs in the next couple of years? Your services income, which is the upper income part of the pyramid, will get impacted. And then lower income, in any ways, you're subsidizing. So it's going to be a perennial fiscal deficit issue as well, which is going to be unproductive spend in some way. So these are all the issues. All of it, initial stage, what happens, you tackled it through announcements. Announcements of actual projects. That is probably the first step, because we can't create execution today, right?
That was Venugopal of Bernstein giving us the perspective on what's happening to the economy and to the rupee and its impact on foreign flows. Moving on to earnings, we have a good Super Friday coming up with 3 big earnings from the Nifty, starting off with Sun Pharma. Sun Pharma is also set to come out with its fourth quarter earnings, and net profit is expected to jump 28% on YOY basis. Meryl is here to tell us what the street is expecting.
Yes, Sun Pharma will soon be in focus after the company gears up to present its fourth quarter numbers. The street is presented and expected quite a fairly healthy quarter for the company, which is going to be led by specialty business growth as well as its Indian formulations business. Consensus estimates suggest that revenues could be seen up nearly 12% year on year, though margins may remain slightly pressured, seen at around 27.2% versus last year's 28.5%. Now, key growth engine for the company continues to be its specialty business in the US, along with healthy traction seen in India formulations. US sales are expected to rise about 5% sequentially. However, they are seen slightly lower on a year-on-year basis due to the Revlimid effect. India, rest of the world, and emerging markets as geographies for Sun Pharma are expected to post mid-teens growth. And apart from numbers, the street will also be closely watching out for key management commentary, especially around the big Sun Pharma Organon acquisition. Investors will be looking out for any updates that we can get on the acquisition timeline, expected debt levels post-deal, and also any progress on key growth drivers for the company as a whole, including its specialty launches and semaglutide generics market in India. We're also going to be watching out for the broader R&D pipeline for Sun Pharma as a whole. And overall, the expectations remain for a solid quarter, but commentary around growth visibility as well as Organon integration could be a big trigger for the stock to watch out when it reports its fourth quarter results.
Okay, Meryl, thanks so much for taking us through that. So that's everything you need to be watching out for in terms of numbers and factors to watch out for Sun Pharma. But joining Sun Pharma, you will also have Eicher Motors that will be coming out of its earnings, and that is expected to report a steady set of quarter four numbers, with street estimates pointing to double-digit revenue and EBITDA growth driven by resilient Royal Enfield demand and improving export trends. Avi, who tracks the sector closely, is joining us to tell us what to watch out for.
Let's discuss Eicher Motors, which is going to come out with its results tomorrow. We expect the revenue to be in the range of 5,980 crores, which will see an uptick of around 14% YOY, but a decline sequentially. Talking about Royal Enfield's volume, it has seen a surge of around 12% YOY, but has seen a decline of around 3% sequentially. Talking about the margins, we will see the two factors that will be at play. One is the January price hike, which will help sustain the margins, and the other one being the commodity inflation, which will put pressure on the margins. And we expect the margins to be around 24.8% in the coming results. This will see an uptick YOY, but a decline sequentially. The export market has also seen a good momentum, and the ECV margins are expected to see a surge of around 50 bips to 10.8%. What we should really look out for in tomorrow's result is the demand and margin outlook, the new product launches that they come out with, and the pricing actions they take to help their margins.
In the metal space, we are going to see Hindalco coming out with this earnings, and Hindalco is expected to post a strong fourth quarter with profit likely doubling year on year on the back of higher aluminum and copper prices. Healthy volumes and robust India operations are going to weigh on the results. Meryl joins us again to tell us what to expect.
Yes, Hindalco's fourth quarter results will be in focus soon, and the expectations for the company's India business are looking fairly strong. Consensus estimates suggest that revenues could see rising about 13% on a quarter-on-quarter basis. EBITDA is seen growing 11% sequentially, while PAT is seen up a modest 5%. Now, what's driving this growth is better commodity prices as well as healthy revenues. On the aluminium side, EBITDA is expected to rise around 7 to 8% sequentially, which is helped by higher aluminum prices. Aluminum prices, in fact, for the fourth quarter were seen up nearly 4%. Now, meanwhile, the copper business for the company as well is expected to remain strong. EBITDA on this front is seen around 10 to 13% higher quarter on quarter, which is again aided by strong copper prices. Now, we're also going to be keeping in mind Novelis, the company's US-based subsidiary, which reported its numbers earlier this week. The performance there as well was fairly solid despite challenges faced by the company. Novelis actually managed to report a 10% year-on-year rise in EBITDA per ton shipped, and this was even after the company faced disruptions from its Oswego plant fire as well as tariff-related pressures. Importantly, management said that recovery in Oswego facility was happening faster than expected. So overall, we're going to be seeing this impacting Hindalco's results as well. The street is expecting a strong quarter for Hindalco's India operations on a broad base, supported by better metal prices, healthy demand, as well as improving momentum in Novelis as well.
Okay, Meryl, thanks so much for taking us through that. So Sun Pharma, Hindalco as well as Eicher to be kept on your radar for Friday. But on that note, we're completely timed out on this edition of Market Edge. Thanks so much for watching.